Yeah, it's fine. That's fine. That's fine. Don't worry. So, okay, so it's here. It's here, so it's fine. Okay, so good afternoon. Yeah, so I'd like to thank the organizers for the opportunity to talk to you about um, an innovation I find quite interesting. Um, I've been working on this for a while now. For me, as an academic, um, I've been doing research on this topic for well over almost 10 years now. And I can see that this is likely to be an opportunity within the housing space for individuals and also for the country. And so I'd like to share these ideas with you today. I'd like to find out first, how many of us have heard of what is called pension asset-backed housing finance? Okay, so there's only one person there. Pension asset-backed housing finance. Then again, how many of us are homeowners here? How many of us plan to own a house someday? Perhaps everybody. So in Ghana, we say that Ghana is a home ownership sort of country because almost everybody wants to own a home or a home sometime in the future. Now, the point is this. How do we intend to acquire those homes? Any ideas? Sorry? How do we intend to acquire those homes? Can I get some responses? Because I want to make it as interactive as possible. So, for those of us who said we want to own some homes in the future, or we want to own a home in the future, how do we plan to do that? Sorry, state housing? Save towards it. So basically, do you want to do incremental housing, as in you build as you make money or as funds are available to you? Or you want to use, say, a mortgage? Sorry?
Yeah, I was, hello, my name is Rudima. I was about saying mortgage loans, but on this platform here, sometime this week, we were told that mortgage loans isn't advisable as a starter. So, I don't know, some are saying savings. So, at least
Okay.
family backings also. Yeah.
Okay, okay. Interesting. So the evidence is that only about 5% of Ghanaians can actually afford a mortgage to purchase a house. Only 5%. So the typical Ghanaian, or what you refer to as the average Ghanaian, cannot afford a mortgage. And it's due to many reasons. Low savings rate, inability to afford the down payment, and also inability to afford the repayment because of low incomes. Okay, and so it is partly because of this reason that I think that this opportunity here in pension asset-backed housing finance might be interesting for us. And so I'll be looking at this as we move on. But then I would also want to know about this. How many of us know how a mortgage functions? What is a mortgage? And how many of us know how it functions? Okay, so yes.
What I know is you access a loan from the bank, but before you can do that, you need to put something as a collateral, as a security for guaranteeing that loan. That's my basic understanding to a mortgage.
Okay, okay. That's great. Here, the collateral you put forward is the property you are buying. Yeah, so you don't need to provide an external form of collateral. Unlike other forms of loans that require that you present maybe a house as a collateral, for a mortgage, the house you are going to buy becomes the collateral. You get it? So that in the event that you default, the bank will then foreclose the property and recover the outstanding loan balance. And so, on this note, I'd like to talk about pension reforms and housing finance innovations, and how pension reforms have engendered innovations that can help us finance housing in this country. And my presentation, I'm hoping that it will be very brief. And so I'll be looking at 5 main things. I want to look at the state of housing finance in Ghana. I also want to make a case for pension fund investment in housing. And I would look at how pension funds have been used to finance housing. So I will introduce you to a bit of international evidence out there and how our local market is picking up in terms of this opportunity. And then I will look at specific innovations within the space and how individuals like you and I can benefit from that. And perhaps I was hoping that I'll meet a bit of some policy people because there are aspects of this that require some sort of policy intervention to make effective. Okay. And then the last one, I would make a proposal. I have an idea about how we can do this, connect this to affordable housing, and deliver more affordable housing to Ghanaians that actually need it. So sometime in 2015, we did a study of property developers and contractors in Ghana. We were interested in knowing how they financed their activities. Okay, and this was the result of the survey. To a large extent, most of them said they used basically debt in different forms. Okay, and that is partly because real estate is capital intensive, or construction activity is generally capital intensive. And for many people, unless perhaps you are the son of Bill Gates or Jeff Bezos, you need some form of help. Okay, and usually you do that by borrowing money from someone. It could be a financial institution or the other. I'm sure for many of you, you've heard of the term using other people's money or other people's money. And so that is what a lot of property developers do. Okay? However, when we asked them what the challenges were, in fact, they outlined a plethora of challenges they actually face. But a fundamental one, which I would like to highlight, was the lack of long-term funds. Okay? And the reason why long-term funds is important is partly because, think about a house. Currently, the average house price, or the cheapest house price you'll find on the Ghanaian market, it's well over $30,000. And the question is, how many Ghanaians can afford even a house that costs $30,000? The average you'll find on the market is actually over $100,000. So fundamentally, what is supplied in terms of housing is just unaffordable to most people in Ghana. And it is so because many people do not have access to long-term funding. So in the West, pick the US, pick the UK, pick Denmark, and those other countries, you can get a mortgage for as long as 30 years, 40 years. And that enables you to spread the cost of the house over a long period of time, thereby making it affordable. Okay. However, in Ghana, yes, the mortgage market has been with us for well over 50 years, and yet it is a space that is still developing. Okay, so this idea of long-term funds is very important, and I'll tell you how we can perhaps solve this problem. Now look at this chart here. Okay. Oh, the slides. Okay, so this is a chart representing the size of mortgage markets around the world. Okay, and I've highlighted that of Ghana because it looks very tiny. You can't actually see it. It's the size of our mortgage market in relation to our gross domestic product, which is the size of our economy, is actually less than 1%. Indeed, it's less than 0.5%. And this is a market that has been with us for well over 50 years. Okay? And so definitely there is something wrong with this market. Now, when you look in detail at the performance of our mortgage market in the last 5 years, okay, this is what you find, that since the year 2015, we've seen increases in the size of the mortgage market, but then it is still less than 1% as of 2019. And when you compare mortgages or how much banks or financial institutions allocate to housing finance relative to other sectors and other areas of the economy, you find that housing attracts the least of funds from the banks. The slides are not moving as fast as I want them to be. So this is a chart showing the performance of industry allocation of loans and advances since 2012 up to 2019. And you can see in the red line represents housing credit. Or basically, think about it in terms of mortgages or money that is given or advanced to people to buy homes. And you can see that it attracts the least of the money that banks hold. Now, why is it so? Why is it so? Now, a big part of the problem is very much related to this issue of rent or landlords collecting rents in advance. It all boils down to risk. The fact that I would say a lot of people are risky and we do not have the appropriate infrastructure to be able to screen our loans. And so usually banks would assume that everybody is risky and then will slash a very high interest rate. One way to screen, to allocate the funds to those who can afford them, and also to get rid of those who cannot afford them. Okay, and so you realize that it is a big problem that we need to deal with. Now, we did a survey sometime in 2018 to understand this problem, and here we interviewed reps from the various banks. We were trying to understand why they were not allocating a lot of funds to finance housing, and this was what they told us. So we're looking at this in terms of the historical constraints of the market and also the current constraint as of 2018. And they said that principally the big problem is what macroeconomic instability. Now, if you've done a bit of finance and you understand how interest rates are determined, you realize that the macroeconomy has a big impact on the interest rates you are charged by the banks. I mean, a big part of it is what is called the inflation premium. And so if you live in a country where inflation is about 15%, then obviously you don't expect to get an interest rate below that 15%. You will get something around 30%, and which has been the case for a very long time. But another big problem they identified was the land administration issues. Now, in Ghana, it is believed that less than 10% of the lands we actually have are registered. What that means is that you have a lot of lands that are litigated because you can't even identify the appropriate owner. Meanwhile, the idea of a mortgage is fundamentally hinged on the security of the land on which the property is built. And so if you live in a country where most of the lands are not registered, there's no proper title, then obviously that defines the business space for mortgages, right? And for many developers who are able to acquire even conflicted land, usually they'll buy the land about 2 or 3 times from different claimants to the land. That obviously increases the price at which they sell the properties. And so that also becomes a fundamental problem in our part of the world. And then the other critical part I'd like to highlight is the fact that it is difficult to screen applications. Why? Because we live in an informal economy where a lot of things are done informally. I mean, in Ghana, the records show that just about 30% of people actually have bank accounts. What that actually means is that the vast majority of the people, I mean, it's very difficult for banks to determine whether a person, to verify a person's income, one, to determine the person's character in terms of whether the person is going to repay a loan if you advance a loan to the person, and so on and so forth. And so these are some of the fundamental problems we face in the market. And I'll be telling you how we can go around some of these issues. Now, with the issue of lack of long-term sources of funding, I'd like to ask this question. How many of us have an account with SNET, the Social Security and National Investment Trust? How many of us are pension contributors? Okay, quite a number. Now, it is the case that because housing is capital intensive, you need to spread the cost of the house over a long period of time. Okay, so basically, housing creates an opportunity for the creation of a long-term asset. Now, on the other side, pension funds usually also have long-term liabilities, and they look to match, or they look forward, or they look for long-term assets to be able to match their obligations, basically. And so there's a sort of a perfect match, usually for pension funds in terms of investment in property. Because typically, if you pick perhaps a young graduate who has just entered the job market, usually around 30 years, that person would have to work for about 30 years to go on retirement. And the pension fund would have to invest that person's pension contribution over the next 30 years. And housing provides that perfect match for pension funds. Unfortunately, in Ghana, we've had a case where I would say that the pension fund, and fundamentally I am referring to SNET, has been involved with some investments in property, but the way they invest in property is a problem. Okay, so I'll give you an example. SNET, as of 1990, held about 20% stake in the then Home Finance Company. How many of us know of Home Finance Company? It metamorphosed into HFC Bank, and it's now Republic Bank. That bank was fundamentally set up as a home finance company to grant mortgages to you and I to be able to buy houses. And SNET invested some of its pension assets in there, okay? But the outcome was that the vast majority of the people who actually invested in SNET, or whose pensions or whose contributions go to SNET, cannot actually afford the same mortgages their funds are used to originate. You get it? And so we'll be looking at ways by which we can overcome that. Now look at this other case. Please, can you show the slide? I think for a very long time, the retirement age for Ghanaians have been around 60 years. But do you know that it was only in 2007 that our life expectancy actually reached 60%. What that meant was that for a typical Ghanaian, he was expected to die even before retiring. And so you would have contributed for, say, some 20 years, 15 years into a pension fund, and just upon retirement, you just pass away. The funds become something else. In 2018, the World Bank data had shown that life expectancy in Ghana is just approximately, let's say, 64 years. What that means is that, on average, many people are expected to pass away at age 64 or around age 64. And so you would have contributed to a pension fund for well over 30 years. And yet, if you survive for 4 years, that is the only time you are expected to enjoy a pension fund. So the question is that, why then do we contribute to a pension fund if we cannot use that money today to improve our lives? You get it? And this is the whole idea of the pension asset-backed housing finance. It is based on the premise that we have very important needs now in the form of housing. And our accumulated pension funds could be used in ways to enhance our ability to acquire a home. Okay? So increasingly, the International Actuarial Association, so actuaries are people who manage pension funds. The International Association had argued on many fronts that actuaries should consider housing as part of their investment framework. Because usually what they do is that they invest in big projects, hoping that the ordinary person can have access to these homes. But it is a case that most of these projects are captured by the rich in our society. And the average or the ordinary Ghanaian is not unable to have access to this. One study had found that if there are two options, one, accumulating your pension fund until you retire, as against using those funds to buy a house. The study found that it is better for a pension contributor to invest that money in a house than to accumulate it until that person retires. And that also provides a sort of a basis for why there's a need to think about using our pension funds to improve our housing conditions whilst we are alive. Because, for many of us, we are likely to pass away even before the time. Oops, I think my battery is down. So, when we look at the leader in terms of pension fund management in Ghana, there are many opportunities within that space. Now, the opportunity I want to talk about has actually come about as a result of reforms that have occurred globally. So, it is a case that historically, many of the pension funds that existed around the world were what was called defined benefit pension funds. So these were actually funds where the pension payout was actually calculated based on some formula. So how long you've worked, your level of income, and then some other factors. Okay? So how much you would earn or how much you'll be paid as pensions is actually predetermined by these factors. It had no link with the performance of the investment your pension fund manager actually makes. So, for example, if you contribute to SNET, how much you earn from SNET as pensions when you go on retirement has no link with the performance of that investment. It is strictly based on some kind of formula. But then, most governments realized that this was creating a sort of a liability for them because the government always had to pay out these pensions out of tax money. And taxes were not coming in, and it was becoming a burden. And so there was a shift, a need for a global shift. And that gave birth to what is called the defined contribution schemes. So somewhere in 2008, Ghana actually reformed its pension system. So it used to be the case that SSNIT was the sole manager of your pensions. But in 2008, we reformed our pension scheme into a 3-tier pension system. The first tier is that fund that is managed by SSNIT. The second tier is what is managed by the private pension funds. And the first tier is a defined benefit scheme, which is based on how long you've worked and then your level of income, basically. The second tier is a defined contribution scheme. And this scheme is actually dependent, or how much you actually earn from this pension fund is dependent on what the money is invested in and the performance thereof. Okay, and so this has created some sort of an opportunity in a sense that in the situation where the funds were defined benefit schemes, what happened was that all the funds were pulled together and invested. But in a defined benefit scheme arrangement, every individual has his own pot of investment or his own portfolio of investment. And you are allowed to do a number of things with this pot of investment. One of such things is that, for example, you can borrow that money and use it as a down payment for a mortgage. And then also, you can also use that as a form of a collateral to secure a loan. You get it to purchase a house or a house if you actually needed it. And so let's look at some, I'll skip some of the slides so that we move very fast to look at, okay. So with the advent of defined contribution schemes came these opportunities for housing financing. As I indicated, it created opportunities in what is called pension loans. So pension loans allow you to draw down on your accumulated pensions for purposes of buying a house. And then it also created an opportunity in what is called a pension-backed loan. So unlike a bank requiring that you provide, say, a house or real property as a collateral for a loan to buy a house, the bank can look at how much you have accumulated in your pensions and based on that would consider that as a collateral and then grant you a loan to buy a house. Okay? So all around the world, this it is not a very popular approach because in the West, the most popular approach has been the traditional mortgage finance schemes. But then you can see from the chart. Please, can you move forward a bit? Please, go forward. Go forward. Yes. Yeah. So you can see that all over the world, there are opportunities. These opportunities actually exist. And one country that has utilized pension asset-backed housing finance to the benefit of its citizens is Singapore. In Singapore, over 90% of Singaporeans own the houses they live in. And that is fundamentally because they were able to integrate their pension funds for housing financing. Okay, and that is what I want to talk to you about today. There are in Africa, there are many examples of this. If you go to Namibia, South Africa, you find these opportunities in there. And for us in Ghana, this opportunity only became available to us in 2008 when we passed the National Pension Act. And so in Section 103, subsection 2 of the National Pension Act, it reads that a scheme usually an occupational pension scheme may allow a member to use that member's benefit to secure a mortgage for the acquisition of a primary residence. So, unlike the situation before 2008, where you accumulated your pensions and waited for about 30 years before you go on retirement, and then SNET then advances some monthly payouts to you. Now, this law is saying that you can utilize those accumulated pensions so far as you are going to use it to secure a mortgage to buy a house. And I don't know how many of us are aware of this. How many of us are aware of this? Okay, great. So this is a piece of information for those of you who are members of the pension system. Yeah, so I'll talk a little bit about this, and then we would look at it. So somewhere in 2019, we did a paper, and in that paper, we proposed a model how this could be implemented, because when the law was passed, usually there's a need for some what is called a regulation, which will guide how that provision in the Act, in Section 103, subsection 2, will be implemented. I've not seen that regulation up to now. And so in 2019, based on research we've done around the world, we proposed a model. And this was the model. The model was that if I was a pension fund contributor, I usually make contributions to my pension fund. And it should be possible for that pension fund to grant me or the opportunity to utilize that accumulated pension in two main ways. One, I should be able to draw down on my accumulated pensions to be able to buy a house. And two, I should be able to collateralize that accumulated asset or accumulated pension asset and use that to secure a loan from, say, a financial institution to be able to buy a house out of that. Okay? And I'm happy that just this year, one of the banks, which is EcoBank, signed an arrangement with enterprise trustees to enable their contributors, which is their pension fund contributors, to utilize their pension assets to obtain a mortgage to buy a house. This is what they are referring to as pension-backed mortgages. Now, the specifics of this product is that unlike the traditional mortgage, or what is called the conventional mortgage, it usually comes with what is called a loan-to-value ratio. So the loan-to-value ratio is how much money the bank is ready to give you, okay, as a percentage of the value of the property you want to buy. So usually, if you look across the banks, usually banks are willing to give you about a 75% loan-to-value ratio. And then the remaining 25%, the borrower is expected to provide that upfront. And this is what we refer to as the down payment. Okay? And for many Ghanaian, because of our low incomes, many people do not have savings to be able to afford the 25% down payment. And so, based on that, a lot of people are usually priced out. Okay? Think about it. A typical developer-built unit in Ghana will cost well over $100,000. So 25% of $100,000 is about how much? $25,000. How many Ghanaians have $25,000 sitting in their bank accounts? Just more than 90% of Ghanaians don't have that. Okay? So what this product does is that in addition to the property you are going to buy, which is going to serve as a collateral, your accumulated pensions will serve as an additional collateral, in which case the bank is willing to grant you a 100% loan-to-value ratio, which means that you don't have to provide that 25% down payment any longer. The bank will provide that so far as you have accumulated enough money in your pension account. Now, the problem with this arrangement is this. In as much as it contributes to enhancing opportunities for people to access mortgages, a big part of the reason why a lot of people do not use mortgages is that they cannot afford the repayment. So think about it. The average income in Ghana is just about 1,700 Ghana cedis or so. And a house, a typical or the average house will cost well over $100,000. The repayment will exceed more than 3 or 5 times the income of the average Ghanaian. Oops, my laptop is off. Okay, so I'll talk through it. The repayment will typically exceed or would be about 3 or 5 times the income of the average Ghanaian. And so most people cannot just afford it. And so there is an opportunity, or in one way to look at it is that there's a need to think about how we can improve affordability, okay, for many people. And how do we do that? First, we need to think about the factors that make housing just unaffordable, or the factors that make mortgages unaffordable. One is that the cost of houses are too expensive. When you interrogate property developers, in my previous job, I was the executive secretary for the Association of Ghana Industries construction sector. And so I had a lot of interaction with property developers. And one of the things they tell you is that one of the reasons why houses are so expensive in Ghana is because of the cost of capital. So if you want to borrow for a house, to develop a house, you typically have to spend more than, you'll be charged about 22% or 30%, depending on the project you want to do. And so they pass on this cost to the final end user of this product. And so, since my slides are off, okay, it's back. So can you go back? Okay, so go back to, move forward to, no, as in forward. Yeah, forward, yes. Okay, so one of the ways by which we can, reduce the cost of housing in Ghana, thereby making it affordable for many people, is to think about it in this way. The proposal is that we can have what is called a housing REIT. So a REIT is a real estate investment trust. This is quite popular elsewhere. It's a vehicle that has been used to invest in property. Okay, so you think of housing, commercial property, and all of that. REITs are very popular as investment vehicles for this purpose. Now, this is the idea. If I'm a pension fund contributor, if a REIT is created, through my pension trustees, I can invest in the REIT. And this REIT is basically a vehicle to pool pension assets together to be invested in property. Okay? And by making the choice to invest that money in the REIT, I earn a right to either have access to a loan from the REIT to buy a house, or I have a right from the REIT to any of the housings or any of the houses they develop for sale. Okay? So the REIT will be a typical property development REIT that will supply affordable housing. Houses that will typically cost between $30,000 and $50,000. Some research has shown that as in the average Ghanaian, given some kind of support, will be able to afford a house that costs between that range. And so what the REIT will do is that when it pools these pension assets together, it will then develop these units. And then the members of these pension funds will then have access to these houses using the same pensions they have accumulated over a long period of time. Okay? The risk or the challenge here is that, based on some assessments, it's been shown that many people have not accumulated enough, for example, to be able to purchase a house upfront. But this is the point. Because of the innovation called the pension asset-backed housing finance, now these pension contributors can have some sort of a down payment, and then the REIT will then go ahead and originate a loan to cover the remaining, say 75% or 80% that the individual will need. And this should actually be done at a concessionary rate because the beneficiary is actually a contributor to the fund. Now, you would realize that this can also be done in a number of ways. So, for example, if the REIT engages property developers to develop this type of properties now, and provides the funding upfront to the property developers, the developers will not have, there'll be no need for the developers to go to the market to borrow money at the commercial rates they are actually offered. And so the REIT can actually give them a concessionary rate or basically supply the funds, thereby reducing the cost of capital that is ultimately transferred to the ultimate borrower, the ultimate homeowner who then goes to the banks to borrow money. And the hope is that when this is done, it should be able to reduce, one, not only the cost at which we deliver houses, but then also it should also be possible that members of this REIT, which is actually these pension fund contributors, should be able to borrow the using their pension, the accumulated pension. They should be able to borrow at a concessionary rate lower than the commercial rate that banks are offering them. And that should be able to improve the affordability of these homes. I think I would end here, and then if there are any questions, I will take them. Yeah, thank you. This thing's closed. Yeah. Yeah. Okay. Okay, so okay. So first, the arrangement is that based on this idea of pension asset-backed housing finance, now we can deal with one of the problems that potential homeowners face, which is their inability to provide the down payment they require. Okay, so if I've worked for, let's say, about 5 years, 10 years, I should have accumulated quite an amount in my pension fund. And based on this, I should be able to borrow that money and use that as a down payment. That would help me overcome one of the hurdles that many Ghanaians face in terms of mortgage financing. The other thing about what I'm proposing, or the model I'm proposing, is that, think about it this way. In any way, I'm a contributor to the fund. And so if I'm contributing to the fund, and I'm also expecting that the fund is going to grant to me some form of a mortgage, I don't expect that it will be at, say, the market going rate, because I'm a contributor to the fund. In any case, the fund is targeted at developing or supplying homes for the members of the fund. And so if a concessionary rate, for example, is fixed, let's say 10%, as against, say, 22 or 25 or 30% from the banks, at the end of the day, I get a house, which over a period of time would appreciate in value. And given some financial instruments like the home equity release, I should be able to release the appreciation or the appreciated value to earn some form of income when I retire on that basis. And so even though some people will argue that, okay, if a member is granted a concessionary rate, there's a trade-off because he will not earn the commercial going rate that others will earn if they had invested in other assets. The point is that that concessionary rate is actually compensated for by the appreciation in the home value at some point in time. Yeah.
Thank you so much, sir. Listening to you, it seems that the provisions that have been made available for mortgages is only referencing people who work for the government.
Okay.
Over and over again, especially in my sector, we have always said that the laws in Ghana don't favor the proponents who actually build the economy, private sector. A lot of things are done that it just goes over our heads. It's like we are not part. And yet we contribute quite a bit to the stability of the economy as well. So yeah. I think one of the things that I'd always been asking with regards to mortgage is that why isn't there a system that is separate from what those who work for the government and foreign agencies in Ghana can access from what those of us who are entrepreneurs who are actually building the economy day in and day out, your regular cocoa seller at the junction, your regular wachi seller, your regular construction company, why isn't there something for us? Because we will not fall under any of the things that you have mentioned. I think it's just been last year and this year that we've started contributing to the SNIT. Unfortunately for us, we don't have a lot of, let me say, incentives. I'm thinking, why do I put my money in a pension fund when I can use that money to turn around my business? It won't make any sense to me. Primarily also because the government doesn't give us anything. We don't get support. We make things happen in the country, but we don't have the support. I remember during the COVID season, they said they were going to give small-scale industries some money. We queued up for the entire period, and we never got anything. And so it's a bit difficult. We are creating the jobs. We are contributing something to Ghana, but we are getting nothing. We pay the taxes. We do so much, but get very little in return. So if there's a way for you and us to sit and come up with solutions, measures, because I may not get my money every month. I mean, I have to pay my staff first. Yeah. Sometimes at the end of the season, like a whole cycle, 6 months, 1 year, I haven't paid myself. My staff are paid consistently every month. I have to do that so that we can survive and they can continue coming back to work so that we can continue serving the clients that we serve. This is an open market economy, and so if we don't put certain things in place to help us who are building this country, it becomes very difficult. I have a home, yes, but I can't even live there because it's too far. And I'm living in Accra, and I'm paying rent. And I'm paying like close to $2,500 every year for rent. Please, we need you guys to come and let's sit and find a way. Because I know that a lot of my people can afford to purchase houses and all that. But we are not doing that now because we are looking at the economy. Charlie, this guy could see dying in the next 3, 4, 5, 6 months. Something else comes up. Businesses are closed down. How do we pay our people? How do we continue to bring in inputs for the work we are doing? We are manufacturing. We are building. It's not easy. So please, if there's another way, and if you have that way and you can talk about it now, all the better. But if you don't and you would want us to sit, please, we are ready to do that.
Okay, so I sympathize with you because one would expect that we would have some form of intervention within the housing sector for the average Ghanaian. But I think for a very long time, we've not seen that intervention coming. I think the closest we've gotten was at the ideation stage. The previous Minister for Works and Housing had an idea which was being developed to develop housing for the masses. But then his idea was to connect this pension fund to enable contributors to access those housing units using their pension assets. Unfortunately, he's been replaced. And we don't know what the new minister wants to do yet. Hopefully, he would want to push that. One of the reasons why I argue for a mortgage is this. Do you know that you are allowed to deduct the interest expense on a mortgage in Ghana? So, for example, if you get a mortgage, you pay an interest on the money. You are actually allowed to deduct that expense before your income is taxed. The effect is that you actually pay a lower amount of tax because your chargeable income is actually reduced by the size of the interest expense. But it's a case that because mortgages are just unaffordable, the vast majority of Ghanaians do not benefit from that. It's only the rich who are able to afford these mortgages who have access to these tax deductions. So in other words, the state is fundamentally financing or subsidizing housing for the rich. That is what is happening because of the inability of most people to use mortgages. And this is where I think the idea of the pension asset-backed housing finance comes in. Okay? It comes in the sense that it now allows you, one, to overcome some of the challenges in assessing mortgages. So in terms of the provision of down payment, now the law allows that you can secure a mortgage using your accumulated pensions, one way or the other. And using the product that EcoBank is now offering, now you can assess 100% of the value of a house you want to buy. And so, yes, it might be challenging to contribute to a pension fund now, but then that asset, if it accumulates up to a certain point, could actually be an asset that can be leveraged to improve your housing conditions using these pension asset-backed housing finance instruments. Yeah. It's my prayer that at some point in time, our governments will pay more attention to the issues of housing and will make more concrete decisions and take stronger steps to dealing with the housing and housing finance issues. But we still have to pray. Yeah. Yeah. Okay, sir.
One, two. Thank you very much. I think I just want to touch on the fact that I noticed when she was addressing you, she was very passionate about they have the mindset that the government is not doing a lot for private sector. But I think the government has come a long way. If we have to be honest with ourselves, for the first time, there's subsidized mortgage rates through the Republic Bank at 11.9% at a fixed rate over a 20-year period. Now, the challenge the government is having is we also have to look at innovative ways to build. We can't always be relying on brick and mortar. I mean, I always tell people we've never had a hurricane in Ghana, but it seems like we're always focused on brick and mortar. In terms of the mortgage facility available, yes, it's for most of the government workers and not for the informal sector workers. But you cannot discuss real estate on a whole, and you cannot take off every sector of the society. So we have to address it one step at a time. In terms of the mortgage availability, we're looking at about 140,000 Ghana cedis, which you can have access to through the 11.9% at 20%. Now, the challenge the government is having now, which is being addressed, is we need to look for innovative ways to build to meet that demand in terms of building a skeleton frame where people can get zero down payment on a mortgage. That can also go a long way, so no one has to worry about, I need 10,000, 20,000, 40,000 Ghana cedis. So in a way, the government is doing its best to address the housing issue, because the housing deficit is over 2.1 million. And gradually, I know with time, what the government is currently doing now is we're acquiring more land banks. We're speaking to a lot of individuals in terms of innovative ways to build, finding ways we can partner, GASEM, Jata Cement, in terms of giving the government subsidized rates, so that when we build, it can become affordable to the average Ghanaian. Because currently, talking from state housing perspective, we're competing with the average developer on the open market. But when you're a government, everyone expects your prices to be much lower. The reason our prices are much lower is because our markups are lower. But then what the government can also do to support some of these initiatives is by providing infrastructure. So that's something we're looking at doing as a government. So overall, what I want to say is that the government is definitely in the right direction in addressing the housing needs of society. They're looking at innovative ways, new models that can fit everybody. Thank you very much.
Okay, so I'm sure that's a good intervention. Yeah.
Are Ghanaians just as good as people from Singapore? What about Denmark? What about the United States? What he just described is exactly how it was done in all of those countries. The solutions already exist. The government already knows. What he's talking about is the analysis of how it's always been done. In the United States, we had Fannie Mae, government mortgage-backed securities. It is already done. You are 10 years old. It's time for you to take the steps to be an adolescent. What does that mean? That means you're going to run into some new problems that come with adolescence. But you already have. I would make sure that every time you talk to someone, you say pension-backed mortgages. Because what Vicki said earlier is all of these things have already existed. The laws are in place. It is the implementation that is not happening. And so the purpose of all of us coming here together at this time is to say we've already created this baby. We are the parents of this baby. And this baby is now moving out of elementary school and is going to need the supports. It's a different time. It is absolutely a different time. But we are ready. And so the next time we stand up, we say we can. We do not talk about what has happened in the past and why it was so bad and we're so upset. Let's not ever do that again. Let's talk about what we're going to do with the government and the private sector and the civil society sector together. GREPA is the civil society sector. They have brought the government to you. They have brought the private sector to you. But without the advocacy of the neutral party of GREPA, it will never happen. And by advocacy, I mean you say, you decide what you want, and you say it over and over and over and over and over and over and over again. If you decide what you want and then you change your mind tomorrow and say something else, you won't get it. So this is an exciting opportunity for you to see all of the pieces of the puzzle that are there and see how you can fit them into a picture. Because housing is a human right. Housing is a human right. And so we start there. And housing is not a scheme to make money. Housing is not a scheme to make money. So we have to start from the point of view of the developer wants, housing is a scheme to make money. The individual landholders, whoever they are, I can use this land to make some money. Well, you can only do that when you've housed your people. So let's change our mindset. Let's change the paradigm. Because This is a lot of work to do, but we've already laid the groundwork. And so I'm very, very excited. I'll be back. How much time do I have to spend here? I'm coming back. I'm coming back. I'm going to help us all through this, so thank you.
Okay. So I think I would end my presentation by saying that for those of us who are contributors to pensions in Ghana, do well, spend some time, find out from your trustees, especially the second tier, and ask them about the opportunities that exist for you to utilize those accumulated pension funds to improve your housing conditions. Yeah, thank you.